Hey, what's good? Remember back when Trump said that he was way too smart to pay taxes? Well, like Day Day said in Friday After Next, I'm trying to see what that be like. The Alux YouTube channel has a video called 15 Ways Rich People Avoid Paying Taxes. Let's go save some money. While we do that, I'm going to keep working on this kids book. Before we get into it, remember to go to coconutjustice.com and get you some clothes that I think would look really good on you. Let's go. All right, let's figure out how we're going to save our money.
Albert Einstein, he said it best. The hardest thing in the world to understand is the income tax. The rich have very expensive accounting experts that help them to minimize just how much money they pay in taxes. In the last decade, we've learned quite a lot about the field, and this expertise has allowed our companies and personal wealth to grow at an accelerated rate. Write all of this down because you don't know when this information will come in handy. But keep in mind, this is not financial advice. This is just what we've seen the rich use to grow their wealth, and we believe it's valuable for you to know about it. Here are 15 ways rich people pay little to no taxes. So starting off at number 1, they invest all of it. The rich don't sit on cash unless they need it for something specific. Here's the golden rule when it comes to paying taxes. Reinvested profit is not taxed. If your company was about to make $5 million in profit, and before the end of the fiscal year you choose to invest that $5 million back into the business in order to grow it even more, well, you don't have to pay taxes on those $5 million. That's how companies grow quickly. As the owner of the business, your net worth goes through the roof with little to no tax being paid. Number 2.
All right, so for small businesses, like instead of going on vacations and stuff, take that money and get a new camera, get a new laptop, buy insurance for your equipment. You know what I'm saying?
Everything you use is owned by a business. The second golden rule of tax optimization is deduct everything. Here's the thing, okay? If a business needs anything to function, the money you spend isn't taxable. You want to buy yourself a new car? Well, the company...
Oh, and just so you know, like if you do freelancing and stuff like that, and I am definitely not a tax professional, but I know as a freelancer, I know that there's a lot of things that I can put on my taxes. Check with your tax people. There's things like internet. You can put on your taxes part of your house if you use it to do I do design and animation and stuff like that. So I get to do that. Other things like, if you have a printer, anything that you need for your business, all of that stuff. If you go to Best Buy and you get a cable, you go to wherever and you get a computer, whatever, all of that stuff, almost positive. Again, I am not a tax professional, but I believe if you take your client out to lunch, that is also tax deductible.
Needs the car as well, so allow the company to buy it on the company's dime, and you get to use it since you need it to run the business.
Yeah.
Now, here are some of the things that rich people deduct. Any type of technology, hardware, software, etc. Laptops, phones, gadgets, they're all needed for the business.
Internet.
Travel. Hotels and flights are needed for business trips. Home office and utilities like the internet. Health insurance premiums, and even going out to eat can be a deductible expense. The more things you can deduct, the less money there is to be taxed. Number 3, move somewhere.
So think about it like that. The government is very interested in having the economy grow, and they always talk about small business being the backbone of the economy and all this stuff. You have an opportunity to take advantage of what they want you to do. So if you're doing any kind of work, if you can start a business and then perform that work through your business, and your tax professional will be able to set things up for you in a way where it minimizes how much tax you have to pay.
Little to no tax. People often underestimate just how big of an impact it'll have if you move to somewhere where you're allowed to keep all of your money. This used to be the way it was
I
back in
think
the
Florida's
day.
like
You
that.
would move to Dubai, Monaco, the Cayman Islands, or
Dubai
the
is like that.
Bahamas as your main residence. These countries have no income tax. They don't require you to pay any tax on the money you make. But there is a catch. It's usually really expensive to move there, which is why rich people get an unfair advantage in life. The cost of living in Monaco is
Jeez.
incredibly high, but when you take everything into account, well, you still save more money living there if your taxes are high enough to justify that move.
That's
Number
crazy.
4, send it overseas.
Send
This
your
is
money
how
overseas?
Facebook, Google, and Apple do it. They set up companies in Ireland because of its tax-friendly environment. These
Oh, I
companies
see.
own the intellectual property. The US company needs to pay a licensing fee to the Ireland company every year to keep developing and selling its products in the US. This created
Oh,
a
that's
legit
how they do
deductible
that.
expense for the US company. Through this scheme, they're taking money out of the US economy and moving it to Ireland, where they end up paying only 1% or even less with even more optimization. If you
That's interesting. I never fully understood that. It's the licensing. So you go somewhere and you start a corporation, there's going to be very little taxes taken out of the money that you make, but then you license it to your company in the United States, which they have to pay for the license. So that's tax deductible because it's just like, you need that license in order to do business. So all the money that you make, that licensing fee goes to pay, and so you don't have to pay that in taxes. And wow, that's crazy. Okay.
live in a low income tax country, you can always set up a local company there and invoice your US subsidiary for rendered services, minimizing the tax burden in the US. Companies like these tech giants would rather pay a fine than pay their taxes in full. The more you
Ugh.
think about it, the more you realize
If you really want to get upset, get on Netflix and watch a series called Dirty Money. Oh, it's going to break your heart.
a fine is a tax for doing something wrong. A tax is a fine for doing something right.
Right.
Number 5, charitable donations. So the fifth rule of taxes, money donated to charity is not taxable. This is why every rich individual owns a foundation of sorts. In their defense, the state has always proven to be a poor manager of money. So instead of giving the state your money to do with as it pleases, well, you're better off using a charitable foundation to make sure your money actually has a positive impact on your community. But
That's
where things
actually
get
really
interesting is
smart
that
if you
even
think about
these
it.
non-taxable
Imagine foundation, you have to basically, the way that it works is you put I don't know how many millions in the bank, and then you're trading it, and then you're basically, that's how you keep the foundation running. But instead of taking all that money and giving it to the government, and we know that the government is wasteful, and we know that it's inefficient, they tell us themselves. So instead of doing that, you take it upon yourself, you start a group, and then you run it with this non-taxable money. And, you can pay salaries, and you can operational costs and whatever it is that you are trying to fix. Eventually, I would like to have something like this set up to where high school age kids where I grew up would be able to learn how to do, multimedia, whether it be, broadcast stuff or whatever. Eventually, that's one of my mid-level goals or midterm goals, is to do something like that. And again, instead of just giving that money to a wasteful government, I can set up a foundation and and teach kids. I'm huge on education. We need to teach our people.
Nations have deductible expenses. They need things to function. You could even donate land, vehicles, or other assets to a charity you own, and it still counts as a charitable contribution. Also, as the head of the charity group, you can still use the same car you donated on paper. Number 6. Instead of a salary, they
And the only time that stuff gets really tricky is when you're not in charge anymore. Say maybe you have a board of directors and they decide that you're not the best for the company, so they fire you. You have to give the car back. But if you're in charge and everything is under your control, then you don't have to anything to worry about.
Like equity. As Queen Bee put it, pay me in equity. You do this for two reasons. First of all, equity might increase in value over time. And secondly, equity isn't taxable unless you sell it. This is how Elon Musk got so rich so quickly. Based on the company performance, Elon gets a new minted stock instead. And that's the thing, so many people don't realize how people become so wealthy. It's common to think these folks are sitting on piles.
Before we get way too off of this topic, as a designer or as a creative person, if you are watching this, as a creative person, this is a way for you to actually get paid. I've done this a few times where someone has a good idea and no money, but they need your work in order to go to the next level. Well, if you don't have any money, but you need this work, we can partner up. And instead of giving me money, you're going to give me a percentage of the value of your company. And then that way I will feel a little more invested and a little more, I want to see you succeed because now I'm in it too. And it's worked out. It's worked out more times than not.
Cash, but they're smarter than that. Number 7, buying art. Here's something only the rich know. The art trade is the last major unregulated market. When you buy a piece of art, it counts as an expense.
If you remember, on this channel, we watched the story of OJ by Jay-Z, and he talks about this. He talked about getting a piece of art worth 1 million. The next year it was 2 million. Then the next year he could have sold it for 4 million and stuff like that. This is what he's talking about.
And if you've been following along, by now you should know that a good portion of expenses can be deductible. But as the rich know, there are layers to this. Let's say you earn $1 million this year and you decide to blow it all on a $1 million painting. So since the expense matches the income, there's zero money left to be taxed. 3 years go by, and now that same painting you own is worth $6 million, or at least that's what a professional appraiser told you. So instead of selling it for profit, you decide to donate it to a museum, or better yet, your own art foundation.
Let's go.
Now this means you just scored a $6 million tax deductible. Assuming you're still earning $1 million a year, you just saved an additional $5 million in non-taxable income, and it's all legal. You could even go for another round if you want to. Let's say you decide to sell the painting at $6 million valuation, earning you $5 million in profit on that deal, which normally would be taxed, right? Well, the government, once again, comes to the aid of the super wealthy. If you take all the money you made from that sale, all $6 million of it, and you buy more art with it, you don't have to pay any taxes on the profit you made from that sale. That's why rich people buy art.
Yeah, so imagine buying a piece of artwork, and then it grows in value. You sell it, and you basically take that big chunk and you separate it into smaller chunks to where you go and get more art, and then that increases in value. Boy, I wish you guys would think my art was a little more valuable.
Number 8, multiple nationalities with no fixed residence. Now this is probably the shadiest and most confusing one on this list, but people have done this successfully everywhere around the world. So when it comes to paying taxes, you have to pay taxes in your country of residence, your home country. But what happens when you no longer have a home country? Because there are plenty of super wealthy individuals that choose not to have a home country despite owning properties all over the world.
Good
When
Lord.
institutions ask for a proof of address, they provide one from a property they own in Thailand or Bhutan, and that's a different language and overlooked by a government that has no intention of providing any additional
Bhutan.
information.
You can't say
Then
that
there are
in
folks
Italy
that buy
all
a massive
willy-nilly like
yacht
that.
and use that as their primary home. One day you're parked off the coast of Monaco, the next you're in international waters. Now, although we recommend having more than one nationality so you can reap the benefits of multiple passports, we don't really think that going fully off the grid is a great long-term solution. Number 9, gift money away. Did you know you can gift things to people and that gift is non-taxable? Crazy, right? There's a $15,000 cap on that gift, though. So if the gift is worth less than $15K, you don't have to tell the IRS about it because
Well, I'm
it
gonna
counts
need a bunch
as
of
a
you guys to give me a
non-taxable
gift.
event. Now you might be thinking, okay, cool, but this is a video about really rich people and how they optimize to get the most out of it. 15K barely gets you into the Rolex game gift-wise. Well, $15,000 might not sound like a lot, but there's more room to maneuver here. As of 2021, the lifetime gift exemption is capped at $11.7 million.
Imagine having a $15,000 gift, and then you buy a piece of artwork that then grows to $1 million, $2 million, and then you do the whole process all over again. Separate it into small pieces, and you go get artwork, and then it grows in value. It's insane. This is what they mean when they say money makes money. When you don't have money, everything is hard to come by. But once you get that forward momentum and you start putting money in the bank and then you start learning how to maneuver your money like this. Elon didn't grow anything. Well, I can't say grow anything, but Elon didn't build anything. Elon bought everything. Elon bought everything. His parents had money. He came to the States with money. And then he just, along the path, he just bought everything. So yeah, I mean, he is smart, but like, to be jumping on stage all ugly like that, go take your ass to the gym, weirdo.
In the US, as long as each gift is less than 15K. $11.7 million in tax-free wealth, well, that translates to a hell of a lot of Rolex watches. Number 10, hold it in privacy coins. Now, crypto is changing the game in terms of wealth transfers and wealth security. The fact you can put $1 billion on a stick, put it in your pocket, and fly to Singapore with it is mind-blowing. With the likes of Bitcoin and Ethereum, which are heavily regulated, measures are in place to provide transparency, link wallets to individuals, and make sure everyone is paying their fair share.
And don't be getting into some stuff with hack to a girl and all that stuff. Stop going crazy. You need at least some sort of governmental intervention, whether it's the U.S. government or just a group of whatever the hell. You need, well, no, it has to be like the U.S. government, because if the bottom falls out, that's how the banks work. If the bottom falls off the banks, the United States will hold them up. We saw it in 2008, that whole criminal people should have gone to jail for 2008. But anyway, the government will hold the banks up. They won't hold up Haktua coin or whatever the hell that was. They don't care. It's not in their best interest. Their best interest is you starting a company. And if you can make it onto the stock exchange and all that stuff, do all of that. But all this silly stuff trying to get away from the government's not going to let this fly too much.
By the way, profits from the sale of crypto are only taxed at 10% in most countries, still giving a better return than some other assets if you take into account the industry price appreciation. Number 11. You've got no money, but you've got assets you can borrow against. So here's why most rich people are super wealthy, but cash poor. In order to take cash out of your businesses, you need to pay taxes on that money, so rich people choose to never take that money out. They just leave it as stocks or assets. But there are situations when you need some kind of cash. That's where the relationship with your bank comes into play. Rich people walk into banks and say, "Look at how much stuff I own, the cars, the assets, the stocks. I'm good for the money if it comes to it, so gimme a loan." And banks look at that portfolio and they give wealthy individuals access to quick cash anytime they want. Now, since this is
And that's
technically
why
a loan
we
they're taking
can't.
out, this isn't their
Because
money,
they don't
so they're
care
not
if you have a
required to pay any
red
tax.
Grand Am
They
that
just
don't
have
go
to give it
anywhere.
back. If all of it happens through a company and not from an individual perspective, well, this mutually beneficial relationship can go on for lifetimes. Number 12, filing for bankruptcy. Now, filing for bankruptcy is expensive, tiresome, and complicated unless you're super rich and you know how to get over it. So here's how the process works. Let's say you're a pretty decent lawyer making $250,000 a year. You own a $1 million home and you manage to save an additional $1 million. So you're looking to go into business and you decide to buy a $10 million office building because it'll make you a lot of money. You go to a bank, you put your $1 million down, you get a $9 million loan, and you buy the office building. 1 year later, a pandemic hits and all of your tenants leave. You still owe that bank $9 million. So to make matters worse, the building you bought is now worth only $5 million because nobody wants to buy an office building right now. But since the office building is owned through a company, our lawyer can now file for bankruptcy. Although they will take the office building away from him and they'll have a really hard time ever working with that bank ever again, bankruptcy laws prevent the bank from taking away the house or siphoning off his wages. This is the difference between being poor and being broke. Rich people can be broke, meaning that on paper their net worth might be zero or even in the negatives, but they'll never be poor. Also, if you don't need the bank, pay it all out in cash. The financial loss would still count as a tax deductible, meaning that for the many years to come, you won't need to pay taxes on your income until you catch up to the amount of money you lost. Number 13, claim your yacht as your second home.
What?
So here's an interesting observation when it comes to taxes. Governments love homeowners and despise the super wealthy who like to splurge. They really want to tax these show-offs. Hashtag tax the rich is still trending all around the internet right now. So what do rich people do to combat this? Well, they claim their yachts as secondary homes to get better tax. At the end of the day, it is true. They're using it as a holiday home when they're traveling to Mykonos during the summer. As long as the boat has sleeping, cooking, and toilet facilities, well, the IRS treats that boat as a second home. And you know, motorhomes can be used the very same way, but how many super rich people do you know buying motorhomes these days? Number 14.
That's a very strange way to call people hillbillies.
A trust to avoid paying estate tax. So among the rich, there's a funny saying that goes like this. A person doesn't know how much they have to be thankful for until they have to pay taxes on it. So unless you're rich, you might not be aware of this. If you're rich and you die, the state taxes up to 45% of the wealth you want to pass down to your children. This is called an estate tax. By the way, here's some important information. The US qualifies you as rich if you're worth more than $11.7 million. For everyone worth less than that, there isn't an estate tax, or it's considerably lower. 11.7 million might sound like a lot of money to the average person, but we're living in the realm of billionaires, and we're likely going to have our first trillionaire in this lifetime. With inflation the way it's going right now, everyone will be a million.
And that's why you see Elon buddying up to Trump, is because he's about to make that move and he wants to go in the record books as being the first trillionaire. So he needs regulations lifted. And there's a lot of lawsuits that are happening with Tesla and stuff like that, that he needs all cleared out. And he's going to make a move. He's going to have direct influence into how technology will move forward. These guys are playing a very, very strategic game, and normal people aren't paying attention to it.
eventually. So the way rich people are structuring their wealth in order to keep the state from taking it away is by using trusts. So if you put things into a trust, provided certain conditions are met, they no longer belong to you, so it's not yours to pass on to your children. Once that property is held in trust, it's outside of anyone's estate for inheritance tax purposes. It also protects you from putting all of your wealth under the name of your child because they could easily blow through it if they decided to, so the control remains with you while you're alive. You could also set up smart contract-like rules, where your children get gradual access to the assets in that trust under certain conditions like when they turn 25 or graduate from school. And number 15, depreciating assets on paper to outweigh the cash income. So accounting is the...
Before she goes too crazy, this is how Trump got in trouble. He would make his own valuation, and like it or not, I think when you live in the gray area, things seem to be a little not legal or not fair for people that try to live in the black and white, right? It's either true or false or blah, blah, blah. But if you live in the shadows, which is where he is, and he has admitted to being good at living in the shadows, he was overvaluing some of his property, and then basically told the bank that they needed to do their legwork because that's what he said it was worth. So if you're doing your job, you're going to find out whether or not I'm full of shit. But they took his word for it, and they made the contract with him off of that. And so, is he really wrong? For me, my brain doesn't work that way. I don't think that trying to cheat people is the right way of doing business. There's some people that do. Some people think that makes you smart, and I just don't think so. And that's why a lot of people, Trump put a lot of small businesses out of business because he's just that guy. That's the way he does business. You need to assume that someone like that is going to try to take advantage of you. I don't think that it's constructive, and it's quite obviously destructive. But if he's not breaking the rules, or if he's not breaking the rules and he's not getting arrested and he's not getting, all these court cases, whatever is happening, whatever. If he's not in jail, then leave him alone.
Language of money, and if you want to be rich, you better learn how to speak it, or at least understand it. In simple terms, depreciation is a deduction that enables a business to write off the cost of the investment it buys, be it a car, a machine, so on. It's spread out for the life of the investment. The reason behind spreading deductions for the cost of property is to enable businesses to be in a position to replace the property at the end of its life. Now, let's say you buy a factory for $10 million and you intend to use it to make those ugly-looking face shields for the next 10 years. From an accounting perspective, every year, the value of the factory will be depreciating by $1 million. If you make less than $1 million a year from selling your face shields, well, there's no profit left to tax. Equipment, vehicles, and even offices can be depreciated from an accounting perspective, allowing you to keep paying less and less tax. If people only knew how to optimize their money, their businesses would grow at much faster rates, allowing them to hire more people and create better products. You are under no obligation to pay more taxes than what's legally required. Taxation was meant to help the poor, but since everything is privatized and optimized for profit, it doesn't work the way it was intended to.
So that, my friends, is how you become rich. You make money, and then you start your own company, and you don't pay taxes. That's how Trump did it. I mean, sure, they're trying to put him up on charges and stuff, but How long does it take? How long does it take them to tell you that you owe $100 in your income tax? No time at all. You know what I'm saying? You have to understand that what the government is trying to do is have you become independent, and they want you to start a company. So then that way it looks good on them. You started a company, you maybe hired a couple people, and you guys are making money. So then you're buying things, and because you buy things, now the economy is moving and rolling, and then rich people take it all right back. I hope you liked this video. If you did, please give it a thumbs up, share it with each and every one of your friends. And if you want to come hang out with me while we watch videos and I work on creative projects, hit that subscribe button and then click on the little bell. So then that way, every time I come out with something new, you'll be alerted. Don't forget to go to coconutjustice.com and get yourself some dope gear. And with that, I'm out.
Coconut Justice.